Time to take your wealth to the next level. Welcome to Learn Wealthy, your go-to channel for real estate insights, market charts, and golden opportunity. Let's build wealth.
All right, we're walking here. I actually brought my tripod and my dead cat right here. This fluffy thing right here. We're walking 2 rounds on this track. We'll probably do like 3 to 5 miles, something, I think. Yeah, there's a lot of things going on in the world that I just want to talk about. How's the sounds, by the way? I hope my dead cat is actually working. All right. Yeah, there's a lot of things going on in the world. I don't even know where to start. Of course, this channel is about finance and macroeconomics and self-development. So yeah, let's start about the economy. Damn, we just unemployment tank that Sam's rule, which is triggered. Sam's rule is invented by Claudia Sahm. She used to work at the Federal Reserve, and it's one of the most powerful economic tool to to signal recession. Other than the yield curve is obviously, I think, the number one. It's the most accurate. The Treasury market yield curve. But we're gonna explain Sam's rule in detail in another video later. So we're gonna be in our so I can show you guys charts. And yeah. So why is that important? Well, other than a lot of people will get laid off. That's why we don't like market crashes and recessions. That's the main thing. The businesses close and businesses close and a lot of people get laid off. But for a lot of people also, good morning, sir. For a lot of people who's not worried about layoff or business closing, like investors, you got to worry about your portfolio. Where are you going to position yourself on these episodes, on these events? A lot of people buy small cap stocks. That's probably what I probably wouldn't want to invest on those. Well, not all market crashes affect real estate. Not all market crashes affect the stock market. Mainly, I believe, recessions and crashes, they affect mostly businesses and unemployment. But some markets like 2008 affected real estate so bad. The recent crash during the virus year of 2020, the stock market fell so hard. So yeah, for stocks, I'm usually just a dividend stocks investor. I don't like to gamble, but of course I want opportunities when there's an obvious dip. I wanna get it. Yeah, so it's very important. It's very important. It's not like talking about crashes or recession. It's not about being doom and gloom. It's about being able to grab opportunities. It's not people who are too bullish about everything on the market. They always say people who talk about crash are doom and gloomers, but I don't think so. These people are just trying to grab opportunities, But yeah, also there's also a logic in saying that if you just keep waiting for crashes, and you're not investing, then you're not an investor. You're just in a sideline. You're other people are playing basketball, and you're watching. You're just watching, and that's really not how to live life. You're just in a sideline watching people live life and play the game of life, So I would say that even even if I'm waiting for crashes and opportunity. I mean, I've only understood all these macro stuff recently. Well, I'm still learning a lot. I still don't understand a lot of stuff. Thank you, George Gammon, by the way. He's pretty much my favorite macro guy. He didn't even go to school for it. He always says he's just a macro addict who's like some YouTube schmuck. He says, because he didn't even get formal education for it, but he's really good at it. I would say he's a lot of people don't make sense, but he's solid in that common sense and logic. We'll talk about George Gammon, but back to, I just threw off some tangent there. Back to the crashes. I didn't even understand a lot of these things before, so you can definitely be an investor without understanding these, because if you're just waiting for crashes then to invest, then you're just living on a sideline. Because when was the last time we got it? Like the virus crash of 2020. I'm trying to get canceled here and not say the C word. And then before that we had a 2008 real estate crash of the subprime mortgages, which they're saying don't exist anymore. Hey, I buy my rentals with a DSCR loan. I think just that alone is a subprime mortgage. Anything that will make you, people arguing there's no subprime mortgage. Anything that will make you more qualified other than the normal circumstances, other than being a prime qualified buyer, is subprime. FHA allows you, I would argue FHA loan is a subprime loan. It allows you to pay 3.5% down payment. How is that prime as a buyer? I think, and all that, it's probably going to be part of our lives now, which should be calculated in the market now. Like all these subsidies and forgiving environment that the government offers, the market manipulation allows more buyer to come into the market, which increases the price of real estate. Because otherwise, if you don't have all these things, not a lot of people can buy. But at the same time, all these people being in the market buying has allowed all these prices to come up and up and up and up and up, because supply and demand is actually, it's a really powerful, it's like a law of nature. It's not like I don't think it's just a theory. It applies to, it's just logical. So I mean, we have all these buyers, but a lot of people are arguing there's going to be no real estate crash. I don't know. A lot of things, I could just never get on with that logic. That things will just go up and 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 never come back down. I don't know. Historically, that's wrong. Historically itself, we always had crashes. So you can look at charts. But also historically it's not accurate that we can't have crashes. And also it doesn't make sense. It doesn't make sense that people's income is just like this, right? And wages is just like this. And all the other prices are just gonna go up and up and up and up and up and up, while people's income is like barely like going up like really slow, right? At some point, all these people trying to sell something, they're not gonna be able to sell it because the people who will buy cannot buy. So at some point, the sellers are gonna adjust on that supply and demand curve. Yeah. Good morning. And that's why I don't believe that prices can just keep going up and up and up and up and up and up and up with no consequences and never come back down. And we have a really big gap right now between real estate prices and wages. The gap right now is crazy. I'll show you a chart of that too. So I believe real estate will be part of the next crash, but real estate doesn't really crash because it's a slow transaction. It takes what, 3 months, 2 months, 3 months to sell, to buy or sell a house, right? You still have to shop, still have to like negotiate, go to escrow. Escrow would last like 30 days if nothing goes wrong, and 45 days, you know. So it's low transaction. So real estate grinds down. During the market crash of 2008, home prices, median home prices on aggregate, didn't hit rock bottom till 2012. That's how slow a real estate crash can go. It's about 4 years till prices hit rock bottom. So on the next crash, that's why I can't do a lot of these YouTube videos, trying to work hard to stock up on cash. On the next crash, I want to have all that dry powder to buy real estate. But that's what we're trying to do. Morning.
Bigger than the island.
We're still recording. Yeah. All right. Enough of that doom and gloom. It's a nice day at the park. It's starting to get bright. It's starting to get hot. I don't notice how much I'm walking if I'm recording and chatting with you guys like a friend. And yeah, it's how you combine health and wealth. I'm not even monetized yet, but yeah, I'm still betting on myself. This whole YouTube thing is just an extra bet on myself. If I get monetized so good that I can retire even earlier than my main plan, then that's great. But if I can just retire on my main plan, which is dividend stocks and real estate, that's still super fine. Other people go through life with no plans. Come on, like this is your life, your own life. Yeah, who am I trying to talk to you about your life, right? But I don't know. I'm not the one missing out either. Oh well, okay, enough of that. Let's talk about dividend stocks. Damn, I think this back to a crash again. Doom and gloomy. All right, so stocks. I believe the stock market is also really on a crazy bubble. People are just like social media and everything else, when it's not foundational anymore and it's just because of hype that makes things, well, like that was like tanking yesterday or something, and the yield curve is nearly uninverting. That's why. And the Sam's rule just triggered all these things happening all together. I'm in the leading side of the crash. I don't care about, it's not about like I'm just guessing there might be a crash. I got all these indicators telling me. Yeah, but it's gonna be a few months after the uninversion of the yield curve and when Sam's rule is triggered. It's gonna be a few months. That's why I really think it's gonna be after election. Whoever wins the election, they're gonna get the crash. That's what I'm thinking, at least. So back to dividend stocks. Yeah. I think the stock market is going to be affected by the next crash. You also have to differentiate between the mainstream, the real economy, as we call it, are the lives of people like us, people who have jobs, who have businesses. It's not usually whatever's happening to the markets. It's not what's happening to the real economy. As you know, not my data, but the government's Federal Reserve chart, wages haven't been keeping up with inflation. That's why people in the real economy are saying that they can't afford stuff, right? This is not like political, it's just data. I can show you a chart again. Some people go deaf to this, to these things, because they have like political biases. But wages just hasn't been keeping up with inflation. It's a pretty big slope. Wages adjusted to inflation. It's called real wages, because when you say real, remember, it means adjusted for inflation. So yeah, like people complaining that everything's too expensive, they can't afford stuff. It's not just, they're not just saying it. So yeah, and so while that's happening, we have all these stock market that are just the stock market, people with assets, people with real estate, all these asset values, the stocks and real estate just keep going up and up and up and up and up and up, even if people are having a hard time like living, because I think the society is just getting more bifurcated. It's like, it's not gonna be like in the future, it's not gonna be like rich and middle class and poor. In the future, it's just gonna be have-nots and have-yachts, So I'm not trying to be in the losing end of it, so I'm grinding. Yeah. So a really poor society, a third world country where I came from, Philippines, where I was born, and I lived till I was 18. It doesn't mean there are no rich people. It's just the society is so divided, and it's almost like there's no middle class, because a middle class in a poor country would be considered poor in a first world country. So yeah, so while this is happening, all the middle class is disappearing and going into the poor section. I'm not trying to be on that side of the curve. I always feel like I can control my life. I don't know why, in spite of everything that you can control in your life, because there are things you can't control, and you just gotta accept. In spite of all these things, I always feel like I can't just act like a victim. I always feel like I can control my life, and I can't ever be persuaded either that I'm helpless, because I'm always gonna accept what I have to accept, and then work on the things I can't, work on the things I can work with. I don't know. I just can't understand giving up. So, man, did I just run off a tangent again on another topic? Yes, I did. So yeah. So the stock market, I believe it's gonna be part of the next crash. So is real estate. But you can invest in real estate and stock market in different ways. And I'm a landlord, buy and hold kind of investor instead of like a house flipper. With flippers, they buy and sell real estate, and on a market crash, if they try to sell, now they can't sell it for more, because that's the name of the game. Sell it for more. Can't always do that if there's no demand. You got to go with the demand. No matter how many supply you have, if there's no demand for it, there's nothing. There's nothing. I believe the economy is driven more by the demand. I think the more the people on the bearish side of the argument are leaning into this, because the bullish people who are like real estate will just keep going up and 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 never crash. They're always talking about supply. Oh, supply is so low. Supply is an all-time low. You know, that's their main argument. But I think that's even a bullish argument. If supply is an all-time low and the prices are like this, then if you weaken demand, which would increase the supply, then prices would just drop. You know, basically supply leading to a supply being at an all-time low. Like, you put a recession in it, you put a lot of unemployment, you put a lot of people who who need to refinance and let go of their 2% mortgage. Then you increase supply. Well, we've already been increasing supply, not only here in Houston, Austin, other places, other states. Florida is crazy right now. Yeah, and we haven't. We just triggered Sam's rule, and the yield curve is not even uninverted yet. See that? See what I'm saying? When the Fed cuts rate, see the Fed cutting rates, it affects the short end of the curve, which is the 2-year Treasury, and that's basically what's going to trigger a bull steepener, which what we're kind of seeing right now in the bond market, in the Treasury market. Bull steepener is when the short end of the curve falls so hard, even lower than the long end of the curve, that will cause that uninversion of the yield curve. And that's where we're gonna hit the that's what we're gonna see the uninversion caused by a bull steepener. And yep, on the next Fed rate cut. I thought they were gonna cut already yesterday, because you know the bond market, the 10-year was tanking so hard. The 2-year and 30-year is already uninverted, but it's just kind of like tiptoeing in the water. It's when it actually, when the yield curve actually dives into the water and fully uninverts, I think that's when we're gonna start seeing the unemployment. Unemployment, just like real estate. I told you that real estate doesn't really crash, drop like crazy. It grinds down slowly in value. And I think that's what happens with unemployment as well. I'll show you charts later, but if you look at graphs of recession, the unemployment gradually increases through the recession period, through the span of the recession. It doesn't shoot up in one day. I'll show you charts. So yeah, a lot of these things are not my opinions. I go by historical data, mostly from the Federal Reserves, because government data, because we trust the government so much. But yeah, I mean, they have all these PhDs, right? The economic PhDs, and for some reason they barely talk about the inverted yield curve. They can barely predict a crash. They always reactionary in the crash, because yeah, at the end of the day, It's about the people, I think. It's about the real economy. All these people buying treasuries, all these people investing in businesses, all these people having jobs and losing it. Yeah, I think with all the PhDs in economics of the Federal Reserves, it will always be the people that will dictate the economy, because it's about the people. I mean, economies, societies, they are created for the people. People created them, and they're created for people. All right, I'm gonna